Hello everyone, I'm Investopedia. Today we are presenting financial implications of cross-border mergers and acquisitions. My first slide, please. I will define what cross-border mergers and acquisitions are. In cross-border mergers, the assets and operations of two different firms from two different economies are combined, establish a new legal entity. This sort of transaction often done by a exchange of stocks and assets, and some this kind of transactions needs approval from the shareholders also. In cross-border acquisitions, the control of assets and operations and transfer from a local company to a foreign company. Uh, these cross-border acquisitions are done into three scales. One is full acquisition, which is 100%, majority acquisition, which is 50 to 99%, and the minority scale, which is 10 to 49%. When there is acquisition less than 10%, it is not called acquisition, which is called as a portfolio investment. Next slide, please. Now I'll talk about some recent trends regarding cross-border mergers and acquisitions. The issue of cash has have increased importance in this kind of cross-border mergers and acquisition, as these and 2.5 years the interest rate has gone up and very high, so there is no easy money from the lenders, so there is importance of cash. And there are some issues regarding regulatory agencies. They have increased the scrutiny for this kind of cross-border mergers and acquisitions. They are demanding more information and slowing the process. And sometimes they are seeing this cross-border mergers and acquisition as a threat towards the national security also. Another issue is supply chain. The companies are thinking that their supply chain are volatile, so they want to have supply chain resilient. So they are doing the cross-border mergers and acquisition regarding this supply chain. And companies are selling assets to create liquidity. This in cross-border mergers and acquisition, they often sell stocks to generate liquidity actually. And there is another one issue of AI, where companies are investing and doing mergers and acquisition regarding this AI, and they are trying to get into this field also. Another thing, dollar index has up 12%, and US investors are having a better position to do further the mergers and acquisition. Okay, that's from my part. My fellow group members.
Hey guys, I'm Athar and I'll be covering reasons to pursue cross-border mergers with corporate perspective. Cross-border mergers and acquisitions impact financial performance in several ways. First of all, market expansion. It opens up to new geographical territories, unlocking revenue streams and broadening customer bases. Economies of scale. Integration leads to cost efficiencies, strengthening operational margins and competitive positioning. And diversification. It mitigates risk by expanding into new markets, enhancing portfolio resilience and risk management. In terms of technological advancement, cross-border mergers and acquisitions provide access to cutting-edge technology, fostering innovation and market leadership via accelerated growth. Synergies with target entities propel revenue expansion and shareholders' return. Moving on to next point, strategic alignment. Firms align with industry trends, seizing opportunities and navigating disruptions. In essence of cross-border mergers and acquisition is more than a financial transaction. It is a strategic maneuver that shapes firms into global market. Moving on to next slide, financial consideration with individual investor. So individual investor approaches cross-border mergers and acquisition transaction with optimism, recognizing both potential benefits and risk on the upside, such as it can lead to increased stock value, higher dividends, and access to new growth opportunities. However, investor can acknowledge concerns such as volatility, execution uncertainty, and dilution risk. To navigate through this complex landscape, investor can evaluate and impact the mergers and acquisition transaction, access synergies, and consider long-term implications. Transparent communication from companies regarding the rationale and potential impacts of deal is crucial in order to maintain the investor confidence throughout the process. Ultimately, informed decision making and engagement with companies, with investor, and maximizing benefits while mitigating risk is good for cross-border mergers and acquisition. That's it from my part.
Now I'm going to go over the key legal and regulatory considerations for cross-border mergers and acquisitions. Next slide, please. So in Canada, the Competition Act regulates mergers to prevent unfair practices. Certain transactions require notification to the Competition Bureau for review. Understanding and complying with these laws is crucial to avoid penalties and ensure smooth M&A processes. Next slide, please. Going into the Investment Canada Act, the ICA oversees foreign investments in Canada, ensuring acquisitions by non-Canadians are beneficial. Transactions reaching certain thresholds may face scrutiny for their impact on Canada's interests and national security. Adhering to ICA guidelines is key for securing regulatory approval in cross-border M&A deals. Next slide, please. We're going to go to the Canada Securities Regulations, which is overseen by principal authorities and ensures transparency and safeguards shareholder interest during M&A deals. Each province has its own securities regulator responsible for enforcing these laws. Companies involved in M&A transactions must disclose key information such as potential conflicts and the impact on shareholders. They are also required to submit regulatory findings like prospectuses and information circulars to the relevant securities regulators. Next slide, please. In cross-border M&A deals, tax considerations are very important, shaping both the deal structure and post-transaction integration. Canada tax laws are pivotal, governing aspects like corporate income tax, capital gains tax, and withholding tax on dividends and interest. To navigate these complexities, strategic tax planning is essential, which could involve leveraging tax treaties and implementing tax-efficient structures. Having a comprehensive understanding of Canadian tax laws is vital for optimizing outcomes and ensuring seamless M&A transactions. Next slide, please. And finally, one last important law is Canada Employment and Labor Laws, which are critical in cross-border M&A, governing aspects like employee rights and restructuring. Employers, they must follow minimum standards such as termination notice periods and wage payments. So dealing with unions and collective bargaining agreements can complicate integration. So successfully handling these aspects reduces legal risks and ensures smooth post-transaction employee integrations. Thank you. That's it for my part.
Hi guys, I'm Prashant. I'll be covering stages of M&A and transactions. So the first one is identification of potential targets. So this would be the initial phase where the acquiring companies identify the potential business which aligns with their strategic goals and objectives. The second one would be the assessment and preliminary review. The acquiring company conducts an initial assessment and review and try to evaluate their strategic fit. The negotiation and the letter of intent, and they tend to negotiate with the target company to discuss the terms and conditions of the potential acquisition. So the due diligence just aims to cover some potential risk or liabilities or issues that impact the success of the deal. So the negotiation and the sale contract, it just outlines the detailed terms and condition of the acquisition. Then implementation and post deal would be once the SPA is signed and all the conditions are met. So the executing the integration plan to merge the operation and acquiring the required target company. Next slide, please. So here are some of the successful cross borders of M&A. So I think the Starbucks established a partnership with Tata to navigate the product in Indian market, and the other one is Pfizer completed a merger with Irish pharmaceutical company, which is an allergen. So by structuring the deal, they had a tax inversion which they used to leverage based on the Ireland's lower corporate tax to their advantage, and everyone's aware of it. So Walmart successfully acquired Asda, which is a British supermarket retailer, so making its way into the UK market. Next slide, please. So these are some of the lessons learned from the mergers and acquisition. So one example would be Chrysler and Benz. They had multiple reasons, but a couple of reasons would be they had some financial difficulties, would be a reason for the main failure, and they had a lack of synergy, and the operational impairments were also not up to the mark, which led to the financial strain. So both companies are a diversified business, and they had some disagreement on plans and some cost-cutting tactics, which also their management style was completely different. They had totally neglected the legal issue. And which before, I mean, before and after the merger, they were not adequately addressed, and that caused the success of the merger. And there were also a couple of corporate clashes, which in turn was the primary cause of the merger failure. I'm done with my part.
Hello everyone, good afternoon. So this is Harish. So today I'll be talking about due diligence in mergers and acquisitions. So due diligence is nothing but simply an examination of all the financial records before entering a proposed transaction with the other party or the seller party. So the components of due diligence has three. Number one, we'll go with strategic and operational review. In this, the senior management and the marketing management will ask questions regarding the seller's management in order to confirm that the proposed deal is in favor of the firm's business strategy. Now, going with the financial review, this majorly focuses on the quality timelines and the financial statements of the seller company, and it also focuses on synergy created and and how long does it take to achieve the synergy. Now, going with the legal reviews, this is performed by the jury of the buyer organization, in which it focuses on corporate records, legal agitations and claims. Next slide, please. So these are some of the websites where you can find some secure information and reliable information in order to conduct due diligence. Go with the other slide, please. Yeah, now in order a company to go with mergers and acquisitions, it should have a potential value creating diversification or value neutral diversification. So the above table depicts you that value creation and also synergy creation through various factors in a company. And now, I mean, it also helps in identifying the potential sources of value as well. Now, going with the financial analysis. So you have so many analysis one by one where I have described it in the formula. So all these analyses were being performed during due diligences. And also, and as you can see at the bottom of the slide, you have two extra things, that is accounting and as well as tax calculations and also the risk assessment. Tax calculation, you have already been, one of our teammates, Safura, has explained about it. Now, risk assessment is nothing but the debt and equity ratio. You'll be calculating and you'll be analyzing risk on it. And also accounting principles, you will be having revenue recognition and expense allocation, and also the financial ratios. Yeah, go with the other slide, Arthur. Yeah, so this is how a due diligence have on a personal perspective. Let's go with the financial impact. So if at all you are going to invest in a stock or invest in a company, so you have to go with first you'll be examining all the how the company is performing in the industry, and you'll be analyzing it, and based upon that you'll be investing your money on. And also going with the legal impacts. So if at all you're going with the purchase of any land or any property, so you'll be analyzing thoroughly, and you will be having a jury for you, so that they'll be giving you some of their own insights about the legal perspectives as well. Now, going with the corporate professional impact, see, this is not applicable for a common individual or an entry-level person who is at the management or at the engineering level. This is only applicable for the HR, so where they meticulously examine a person's and also if he has a clear chart on his name or not. So that's all. Thank you so much for this opportunity. And forwarding this with Mukesh.
Yeah, I guess. Talking about the advantages in a corporate lens, economies of scale were previously explained well in the previous slides about the competitive advantage. While an M&A deal is closing, the company can strengthen its market share, brand presence and capabilities, and faster organic growth. If a company is going to enter a new segment, market or region, with like starting it from the scratch, they can go either with a merger or acquisition with an organization which is already established well in that segment. This way they can grow in a faster way, and we all know the synergies like cost, resources and brand synergies. In a personal lens, individual can gain fortune by trading in stocks regularly after an M&A deal is closed, and if they don't want to take that risk, they can directly invest in the equities, which can reduce their risk significantly. And in a working class employees can have new job opportunities if a company is doing an M&A deal overseas, which also brings access to new technologies. Moving to the next slide about disadvantages. In the corporate perspective, the period and the process is very hectic and the time consuming, which makes the process complex. And while doing an overseas M&A deal, of course, there will be a cultural difference between the employees and the employees, which brings communication barriers and loss of reputation, in the sense making an M&A deal with a company which has not performed well or has a bad image over there. And potential overestimation is nothing but they predict or evaluate the sales or the gains while doing the M&A deal, which should not be the actual thing. And in the personal lens, if a company or a manufacturing facility is shifting to another region, there might be a huge job loss in the particular sector. And if a company is merging with another company of similar interest, it brings lower competition within the market, and which leads to monopoly. And as we all know, a monopoly creates high prices and market uncertainties. So moving to the next slide about some of the examples of successful as well as unsuccessful M&A deals. Some of them are Tata Motors acquiring Jaguar and Land Rover, Disney's acquisition of Marvel, and Starbucks merger with Tata in India. And some of the unsuccessful deals are Microsoft's acquisition with Nokia and eBay's acquisition of Skype. So all these examples have various factors which determines their successful and failures, which is again a broad topic which cannot be explained here. Thank you. Moving forward.
Hey guys, so I'm Rishabh, and today we're going to talk about lessons learned and impact on common people of M&A. So today we'll talk about corporate and personal perspective of that. So for corporate perspective, we can go that some points are mentioned here on the slide, and I'm going to explain it in a few minutes. So strategic fit, increasing market share, broadening product offerings, or gaining access to new technologies are just a few of the strategic goals that are frequently sought through mergers and acquisitions. And second point is integration challenges, and for that, the difficulty of integrating two different firms is one of the most important lessons to be gained from M&A activity. And for the third point, the synergies realization, merging businesses hope to create synergies that reduce cost or increase revenue. And for regulatory scrutiny, businesses must comply with antitrust laws and other rules, and mergers and acquisitions must receive regulatory approvals. And now we are going to talk about the personal perspective of that. So job security is one of them. As businesses simplify operations and eliminate redundant positions, M&A activity frequently results in personnel cutbacks. Also financial impact, which is M&A deals may have an effect on workers' financial security, especially if there are modifications to their pay perks or stock ownership. And for the third point of personal perspective, the cultural adjustment, the corporate cultures, values, and working methods of merging organizations may differ, and career opportunities like M&A activity can lead to employment losses, but it can also open up new career paths for those with the necessary training and experience. Next slide, please. And now, to summarize this, we can summarize this in a few points. Like mergers and acquisitions have some significant impact on businesses and individuals. They reshape the corporate environment and affect a large number of people. Lessons from past M&A transactions can help businesses and individuals handle future deals more skillfully. Also, awareness of the potential effects of M&A transactions is crucial for successful navigations in the landscape. Thank you for listening, guys. And the next slide is the references from where we did this presentation. Thank you.